Good morning, everybody. Hey, welcome to Thursday. It is March 14th. Hope your week's going well as we get close to the end of this week. Yesterday showed us a mixed bag with the Dow up, the other two indexes down. And we'll talk about that and more with some economic news coming out here now today. When Dave joins us here in just a few seconds. Before we do that, though, let's not forget that in this world we live in today, there are so many things that are out of our control. However, you can take control of your portfolio by controlling the amount of risk you have there. You need to know how much risk is actually in your portfolio before you can adjust it to what portfolio risk should be for you. Give us a call at 863-382-0037 to schedule your core retirement analysis. And with that, we got Dave coming up next.
It's 8:42 here and 18 before 9. Time to check in on money and find out what Wall Street's doing for us, to us, and through us today. On the phone, we got Phillip Statler from Statler Financial Services in downtown Sebring to flesh everything out. Phillip, good morning. How you doing?
Hey, good morning, Dave. Doing well today. It is hard to believe that this week's about over, and we head into the weekend of what, 12 hours of racing, right?
Absolutely. The track is hot. They're out training, they're out practicing, and they're out doing timing runs today. And 180,000 people in town. It doesn't feel like it when they all cram into the track, but boy, the day or two before they open up the track, this town's a zoo every year in this week, isn't it?
It is, and our economy thanks them.
Absolutely. Welcome, race fans. We're glad you're all here. Don't forget to leave money when you leave. Let's see. Set up the table from yesterday. Yesterday morning while I was soloing, I was saying it was looking like it was going to be a pretty much hold steady day, and I think excepting the NASDAQ, we ended up with that. The Dow ended up gaining 38 points. S&P was down by under 10 points. NASDAQ did lose about 0.5%, down 88 points, but either way, it was not exactly a catastrophic day. I suspect we were waiting for the morning reports here to make some decisions, wouldn't you think?
I'm thinking so, because actually yesterday there was no economic news coming out, so you had to read between the earnings lines to really determine what things were happening. But today we can't say that, can we, Dave? We've got a lot of stuff hitting the news today.
Yeah, not exactly. Yesterday morning was kind of interesting. About the only market-moving information that came out was the mortgage index, and the mortgage index said, yeah, everybody that bought a mortgage 3 months ago at 7.5% are refinancing. So the refinance number went through the roof, and nothing else moved whatsoever. So it was really a nothing day that was out there. On the other hand, the government data dump this morning, I got numbers running out of my nose. Initial jobless claims, watching the job market. We were not supposed to continue falling, but we only had 209,000 first-time jobless claims again today. We just can't fire anybody in this country, and for the economy, that's good news, but kind of makes you wonder what the Fed's going to think of numbers like this next week.
It really does, Dave. And the little blurb I saw was there's no layoffs in sight. So that's a little concerning as we head into the Fed meeting next week as to what they're going to think of these numbers and how they're going to put them into their formula to determine their next steps.
Absolutely, it's just one of those times where this data couldn't come out at a worse time for the Federal Reserve. Let's see, retail sales from last month expected to go up by 0.8%. They only went up by 0.6%, so that's a bit of a disappointment, but at the very least gives us something to tell the Fed things are slowing down. Wouldn't you agree?
Well, yeah, and it's better than last month, I guess, because last month it was down 0.8%. So, a little bit of a rebound in retail sales. It just continues to show the strength of the U.S. consumer as they continue to buy stuff.
Yeah, even if we have to burn plastic, we're going to buy it, I guess. Then we get up into the big stuff that we talk about, inflation, wholesale inflation, the producer price index. Absolutely nothing worked if you were going to set a goal of seeing the inflation rate going down. The producer price increase, monthly index increase, was 0.6%, and that brings the core was up by 0.4%. That brings our core annualized producer price rate up to 2.8%. I thought we were shooting for 2.
Yeah, I think so, Dave. And both of those numbers that came out were double the expectations. I mean, the producer price index was supposed to only go up 3/10, and the core was only supposed to go up 2/10. So we managed to double those across the board. And I want to circle back around just a little bit on retail
Yeah.
sales. We talked about plastic, and I was talking to a friend of mine who's in the banking business, and he said they are seeing delinquencies increase across the board.
Mm.
Mortgages, credit cards, and auto loans, all delinquencies are increasing. So we don't see that in any numbers we see here today, but that's a little concerning heading into this year. What's that mean 6 months from now?
Yeah, and you can put your Nostradamus hat on because you and I were talking about a potential bubble on auto loans about 2 years ago, weren't we?
Yeah, we were, and so we may be a little long in the tooth for it to happen, but I got a feeling it's eventually going to hit.
Yeah, this starts to sound like, I mean, just look at the difference when I bought a new car about a year and a half ago with the interest rate that I paid on that compared to the one that I paid 2.5, 3 years earlier from that. The interest rate is that much higher, and my gosh, okay, I'm fortunate I can afford it, but with the price of buying a new car, I got to believe that a lot of those payments are eventually, as everything else starts going up as well, going to become expendable. So I kind of expected, and we saw it on the banks too when they were reporting earlier in the season, that the bad debt reserves, the numbers have been piling up just in preparation of seeing a lot of write-offs.
Yeah, they are. So we'll continue to watch that and watch for those reports to come out.
Absolutely. So there's our big numbers for the week. Inflation is not as much under control as we expected it to be. Jobless claims are still incredibly low. The job market is still hot. And we do rebound nicely on buying stuff, like I said, even if it involves burning plastic. I would expect to see the futures going down through the floor off of that, like they did when the consumer price index was an unpleasant surprise. But when we get to the futures, it sounds like they're reacting almost the opposite, aren't they?
Well, they're off their highs from what they were earlier this morning, but they're still in the green, which, yeah, for me is kind of amazing.
Yeah, it's kind of a head scratcher. Other tidbits going out this morning. Dollar Tree led the financing trending tickers page, fell 14% yesterday. They did miss on their annual report, but they fired their CEO. I don't know which one prompted the 14% tumble, but one way or the other, they definitely missed. And Tesla fell by 4.5%. This is a quote I absolutely love. One of the Wells Fargo analysts put out a report this morning. They're calling Tesla, the electric vehicle maker, a growth company with no growth. I got to figure if I was Elon Musk, I would not be happy to see that quote. Would you?
No, definitely not. Definitely not, for sure.
Oh, Lordy. Talking brass tacks, we do have a few companies reporting that qualify as household words. How did Dick's Sporting Goods do last quarter?
Hey, they were right up there with the retail sales numbers heading up. They had a really good quarter. They beat by 50 cents a share, came in at $3.85 of earnings on 3.88, almost $3.9 billion of revenue. So they are being light this morning. They're up 5.33% before we get going.
That's a lot of golf
trading.
clubs.
That's a
That's a
lot
lot
of
of golf
sporting
clubs.
goods. Yep, it sure
Sure is.
is.
What else have we got?
So the other thing we have is well, and they didn't I don't think they reported, but this one's kind of interesting to me. Under Armour, because we've talked about them off and on over the last 5 or 6 years. Um, they are replacing their CEO. They are
Another one.
they're bringing back the founder, Kevin Plank, is returning as chief executive officer, and so the stock's not really liking that change, but it goes to show you that what they were trying to do wasn't working. They're
Bringing
trading
back
down
the
about
retreads work.
yeah.
Bring back the retreads worked for Apple and Disney. Why not try it on a smaller company, right?
Yeah, so they're down 5.5% this morning. The other thing I kind of like though about them is they added and made Mohammed Al Aryan is going to be the chairman of the board. And I may not know him, but he is I have followed him and watched him over the last probably 20, 25 years. And
Mm-hmm.
and he's a pretty good economist when it comes to to that type of thing, and a good portfolio manager. So he's going to step in and become the chairman of.
I know when you've talked about portfolio news and economy and economic news, you've quoted him a lot. I know I'm familiar with the name, but I don't exactly know his track record. It's definitely a big name to add in as chairman of the board, though, isn't it?
Yeah, it really is. So that's some good news there for them. Trying to see if there's anybody else that really is. Not much else out there, Dave, in
All
terms of
right.
earnings.
Well,
We're getting towards the end here.
absolutely. Well, we reset the table here. It was kind of a whole steady day. The blue chips on the Dow were up by a little bit. The broader S&P was off by a little bit, and the growth stocks and the Magnificent Seven. One of my columnists is saying we should demote it down to the Magnificent Four because they carried the Nasdaq exchange down a bit yesterday. 45 minutes before we open, what are we looking at today, Philip?
Dave, right now we are seeing a little bit of retrenchment in the indexes. Now they're still green. It doesn't mean they'll open to the green because this is the futures index looking. So the Dow right now is up 1/3%. The S&P 500 is up 0.2, and the Nasdaq 100 is up about 0.3%. So everything's in the green. I'm not sure how the open will happen though. We still got about 40 minutes before that's going to happen. On the other side, though, man, do we have some numbers? Silver jumped over 25 to $25.22 overnight. That's up 1/4%. Gold is off its highs, down about 0.5%. And then crude oil, Dave, I don't know what you did while I was gone, but man, it's up another 1%. It's at $80.58 a barrel. Get ready for gas prices to go up.
Oh, yeah, when it bumped over 79 yesterday morning, I didn't see too terribly much pleasant to talk about on that corner either. Messing around over on the overseas markets, the Asian markets were all over creation. Japan was up by over 100 points. Hong Kong have a couple of real busy up days. They fell by 120. Overall, indexes in Asia are a little bit off this morning in the 0.5% range. Swinging over to Europe halfway through their trading day, they're kind of following our futures. They're all kind of heading back toward level. The overall index on the European markets up, call it around the 0.25% range halfway through their trading day over across that side of the pond. Trying to figure out where one's retirement can be takes a little bit more than a crystal ball. It takes a pro with an eye toward the risk in my portfolio. How do I find you to get the risk out of mine, Philip?
You know, Dave, there's very few things that we can control in this world, but folks can take control of their investment portfolio by knowing how much risk they have in that portfolio. And that's why we developed the core retirement design to process through and make sure the risk they have is the risk they should have in their portfolio. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And one more day before race day tomorrow morning here, same time on Light. Philip, thank you so much, and we'll catch you then, all right?
All right, man. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.